So a few weeks ago, I was having a conversation with a friend of mine who likes the stock market as much as I like the crypto market about the last 5 months, which haven't been great in crypto. And so he turned to me and said, Lorraine, we have a saying in the stock market that you should sell in May and go away and come back later in the year. And so that conversation has inspired this video. Should you really sell in May and go away? Are there other sayings that are applicable to the crypto space? I'll only focus on 2 of them. So let's start with sell in May and go away, which is also known as the Halloween effect. It is based on the observation that the stock market tends to do well between the months of November and April and tends to underperform between the months of May and October. This saying has its origins in the London financial markets, and the full saying is, sell in May and go away, don't come back till St. Leger Day. And St. Leger Day is St. Leger Stakes, a horse race that occurs in the UK in mid-September and has since 1776. The sell in May and go away effect has been observed in most major stock markets, though not all of them and not all the time. And several reasons have been proposed for the seasonality of the prices in the stock market. One of those reasons is that traders and investors go on holiday in May. And as a result, the trading volumes are much lower than they would be. Therefore, it's harder to trade and get a fair price. If you're selling, you probably sell for lower than you would have liked. And if you're buying, you probably buy for more than you would have liked. So why not come back when the traders and investors are back and the trading volumes are much higher? Is sell in May and go away applicable to the crypto market? Except for this year, historically, it has not been applicable. The summer of 2017 was great for crypto. This was the ICO summer. An ICO is selling tokens to the community prior to those tokens hitting the exchanges. When those tokens and coins hit the exchanges, they were exchanging hands for multiples, sometimes 10 times what they had been purchased for during those public sales. And so the summer of 2017 was pretty good for several projects. We had the DeFi summer of 2020. That summer through the end of the year were really good for the crypto space. But let's look at the entire market. And I'll be using Bitcoin as a proxy for the market. So between 2017 and 2019, the price of Bitcoin was dependent on whether we were in a bear market or a bull market. In 2017, when we were in a bull market, the general trend was upwards. And so the months of May and October followed that trend, with prices continuing to increase throughout the year. In 2019, when we were in a bear market, prices between May and September were a continuation of the trend that had been set earlier in the year, and the prices went down. The same thing happened in 2021, 2022, 2023. However, this year, someone who sold in May and decided to buy back in September would have had a healthier portfolio than someone who had decided to hold. But generally, this saying hasn't applied to the crypto markets. And then we have the January effect, which is the tendency for the stock market to perform really well in January. Now, there are people out there who say that this effect is not real, others who say it only occurs for certain categories of stocks and not all of them. Then there are others who have shown that it was very dominant pre-1993, but since then its dominance has reduced. And there are others who say it's not the entire month of January, but that this effect is observable in the first 2 weeks of January. And again, several reasons have been provided to explain the January effect, from people selling certain stocks at the end of the year for tax considerations and then choosing to reinvest in January, to people just being generally optimistic at the beginning of the year. So the year begins, we're very optimistic, and we decide to buy stocks. Is this effect observable in the crypto market. And so this is a chart of Bitcoin from 2014 to today. Again, I'll be using Bitcoin as a proxy for the crypto market. And just by eyeballing this chart, you can see that January hasn't been a good month for crypto. So this year, the months from April through September were not great for crypto. If you had decided to sell in May and go away, you would have been trying to time the market, which is a very hard thing to do. There are patterns that hold up. In a bear market, prices go down considerably, and in a bull market, prices go up considerably. But there's a lot of volatility even within those cycles. So trying to time the beginning and the end of each of them, or when that volatility is going to begin and end, is also very hard to do, even for a seasoned investor or trader. I think it's better to base your decisions on the current market conditions, trends that you've noticed, as well as analyses. And then based on your own goals and your risk appetite and your risk management system, you can decide whether it makes sense to hold or to sell. This is all that I have. Thank you so much for watching. I will catch you in the next one.